Hi guys, and welcome to this quick TA session on bull versus bear market price action. In this session, I want to point out what the differences are between a bullish and bearish environments, and what do we have to expect from price action. I will keep this very simple. When I talk about a bear market environment, I mean we had this blow off top in end of 2017 here. We had a major correction down, and then we had a phase in which price action became less volatile. Then we had a phase in which we had increased volatility again, but once again, it calmed down. And then we had an explosion, and then it calmed down. So this is typical price action in bear market environments. We have volatility, extreme volatility, and then price action calms down. The volatility is lost over time, and we often see some kind of triangle patterns forming like this, and this. This is very usual behavior. And when we talk about bull market environment, we have, first of all, we have massive pressure in the market. We have higher volume. We have stronger trends. We have more aggressive price action. So price action overall is very aggressive. And this has a lot of, this has significance for how we have to trade. This is why we have to adapt to changing market circumstances, because bull and bear cycles and bull and bear markets, they are very different, and they have to be traded differently, and you have to put a different focus on certain aspects of trading to maintain your profitability and especially be as profitable as possible. So here you can see we have these strong trends, very rough corrections, but very volatile, strong trend. Then we had some kind of consolidation calming down here, but it was not really calm, because when you zoom in on the chart, and I'm going to do this now to the 15-minute chart, and this is our current trading range here. But let's look before we had our crash from 60K. So this kind of price action here on the lower time frames, you can see how aggressive price is shooting to either side. You often do have a clear trading range, but within that trading range, price action is extremely aggressive. And you can see that lows and highs are violated very often. For example, we had with this kind of high and this kind of low, and this low here, you can see that these highs and lows are often violated. This is very typical for bull market environments, because there is quite a bit of liquidity to grab below the lows and above the highs. So price likes to go there and grab the liquidity, and then to continue in whatever direction is appropriate at that time. However, this is very this might be confusing for many, because when you learn about price action, it is often said that lows and highs represent strong support and resistance. So we have this swing low over here, so we expect maybe this to hold and price to bounce there, but in fact it doesn't do that. And this is a signal that we are in a very aggressive trading environment, in which low time frame support and resistance is violated more often. This is because I'm going to write this down on the chart. Bullish or bull market environment. This is simply because, let me make this teal. We have aggressive price action. We have higher volatility. And this is because there is a higher volume in the market, and we have more actors in the market. Right? So in a bull market environment, more people come in, join the game, and price action becomes it becomes more emotion based. So price action in bull market environments is driven by emotions. So you have all of these newcomers to the market. You have a lot of big players in the market. And for example, when you see that this low is being violated over here, a lot of people sell into this because they see the low is broken. They experience fear and they sell into this. So we have a lot of selling pressure at this point by the dump money and a lot of buying pressure because, of course, the smart actors know that this is going to happen. So this is a liquidity grab. They grab the liquidity and can buy into this at lower prices and make this bounce higher. This is how bull market environments work very well for the smart money and very, not so well for the dump money. It is emotion-based. So price action, you can see the emotions in price action. The sharp moves, the zigzag ranges here. This is particularly interesting after this emotional event over here, which stirred up quite a bit of emotions here, and you can see how these zigzag ping pong price action moves here. And on the 15-minute chart, it becomes very apparent. Looking at current price action, you can also see this very clearly. Look at this. This is not a calm market. This is extremely aggressive to either side. And support and resistance like this high or this low, you see they don't have that much of a meaning anymore. They are not reliable anymore. So you have to expect on the lower time frames a lot of support and resistance to get violated and fail to hold. And we see a lot of failed breakouts in bull market environments. This is also a reason because of the emotions and the nasty tricks that smart money is playing on the newcomers in the market. Like this failed breakout, for example. This is broken. FOMO is going on, selling, and down again. Failed breakout, reversal. And we see this over and over again. Like here, you can see the same thing. Failed breakout here. This is also a very good example. Failed breakout. So this is a thing you have to look for because it is important. So the key takeaway is bull market environment, aggressive price action, very dangerous if you don't know where the key support and resistance is. So lower time frames, less reliable. Low time frame support and resistance is less reliable. We have a higher volatility in general. We have higher volume, more actors in the market, and price action is driven by emotions. But we have another point. Price action is less surprising. And this is very important to understand because of the high volume in the market and the many people that are involved. Price action becomes very predictable. You have this high volatility on the lower time frames, but when you look at the medium time frames, for example, everything makes more or less sense. We have clear structures. We have clear ranges. For example, we have this low of this range. We have this high, these high area of range highs here. We have a center of this range, which is about here, as you can see. Prices circling around this center. We are currently exactly at that level. And the patterns also make sense. If you look at, for example, let me see. We had a trend line here. So we had this triangle, it broke down. We had this inverse like head and shoulder. It's not exactly an inverse head and shoulders, but it is similar to one. It represents what an inverse head and shoulder should represent. There's a key level here. We had a failed breakout to the downside, confirmation of support and a bounce. So the price action on the medium time frames makes a lot more sense, and it is not surprising because you can trade this. You can see prices because of these motions and these moves. Levels get properly tested. It's not like you see a move like this suddenly. This would be surprising. If price were to explode like this now, and then trade here, this would be surprising. But we don't have this in bull market environments because there's so much volume, there are so many orders. A single player doesn't have the power to trigger such a move. Even Elon has not the power to produce these super surprising moves. Yes, the sharp sell-offs over here were a little bit surprising because they were particularly strong. However, this is not comparable to bear market price action. So yeah, it's a good thing. It's less surprising. It's actually good tradable if you look at the medium time frames, and the lower time frames more dangerous because aggressive. And now let's have a look at the bear market price action. And for this, I'm going to take some examples from 2018 and 19. As you can see, we had this major consolidation. And what we want to see is that price action calms down. And then we are entering a bear market environment. And this, for example, and this is a bear market. It's a typical bear market environment. So let's have a look at this range over here on the 4-hour chart first. And as you can see with these moves, look at this. We have very surprising sharp moves all of the time in both directions. This is the opposite of what I just talked about in bull market environments. So in bear market environments, we have, first of all, calm price action, not aggressive. Then we have lower volatility, and we have lower volume. We have less actors in the market, and we have price action that is not driven by emotions, but basically it is what we are looking at here is not emotion based, it is more logic based. So what we want to see is proper support and resistance retests. We can see ranges hold very well. Yeah, that in bear market environments, it's all about support and resistance, trend, momentum. You can analyze it in an easier way. So it's less driven by emotions, but driven by logic. There's a lot to talk about in this case because if you trade a bear market environment, if you're emotional, you get wrecked. It's a typical thing. I mean, it's the same in bull market environments. When you're trading with strong emotions and you let emotions decide, you will get wrecked. It's as simple as that. But in bear market environments, it's even more important to stick to firm logic, but also to risk management. So yeah, price action. This is because price action is actually more surprising. Price action in this case is more surprising because, as you can see with these wicks and strong moves over here, it becomes apparent that we have this this unpredictability. These moves happen in a few seconds or minutes sometimes. These are short and long squeezes. Price action is being pressed into a pressure zone like this, and all of the time, and sometimes in an extreme pressure zone like this, and you barely have any moves here. And then all of a sudden, we see this kind of move, or we see this kind of move. So this is what makes price action in bear market environments more surprising. So we have to put a focus on risk management. Focus on risk management. It has to be extremely, it has to be your number one priority in this kind of environment. If you trade cross, for example, you see this trading range, you go short here at the top of this range, you trade cross and you see this happen, you get liquidated on your account and it's over. This happens to many. So we had the same over here. As you can see, we have very clean price action. We have these sharp moves, surprising moves. Then we have clean price action, sharp move, clean, sharp, clean. We don't have this violating of highs and lows all the time. This is not happening here. This is easier to trade. A bear market environment is easier to trade, but it is only profitable if you have a very good risk management. Whereas bull market environments are more difficult to trade. And you have to get rid of the emotions in the market, which could be influencing your trading as well, by focusing on logic. Whereas price action in a bear market environment is already logical, but in a bull market environment, it is less logical, it is more emotional. So you have to put in more logic here. So focus on logic-based trading, right? This is what is missing here. It's an emotional market, you have to focus on logic. This is an unemotional market, but surprising one, so you have to focus on risk management. This is part of, if you understand this, you realize that how important it is to adapt. So if we continue this trading range into this direction, and let 1 or 2 months pass, price action will calm down at some point. We'll enter a pressure zone, and then we will have more of a bear market environment. More and more people will leave the market because it's boring. There's not much money to be made. Maybe they are broke. They have blown their accounts over here. There are a lot of reasons why this market could be turning into this, especially now that we could be entering or could already be in a bear market, which is not yet 100% confirmed because we didn't get any retests in this area that confirms this is now resistance. So as long as this hasn't happened yet, there's a chance this could continue higher all of a sudden. But for now, if we think of this continuing in this direction and we see that volatility volume is dropping and the price ranges become more stable, then we have to adapt. We have to switch from this to this. We have immediately prioritize risk management because we could see sudden moves sharp moves all of a sudden. Okay, this is the first introduction to this. To bull and bear market price action. Hope this was helpful, and see you in the next session.